Hi, this is Nicholas Vardy, and welcome back to this week's edition of Buy or Buy. In this series of videos, I take a popular stock making the media rounds and I strip away all the hype, and I tell you whether to buy now, buy later, or buy never. Now, some analysts have called semiconductors the new oil. Indeed, like the oil crisis in the 1970s, the shortage of semiconductors has acted as a brake on recent global economic growth. Today, I want to take a look at a leader in this semiconductor sector, a stock that many investors are familiar with, and one of the biggest winners of the past decade, Nvidia, ticker symbol NVDA. Nvidia stock has been on a remarkable run. The stock gained 125% in 2021. That's actually more than what the stock gained in 2020. In fact, Nvidia has doubled each of the past 2 years. Overall, Nvidia has delivered nearly 5,000% returns over the past decade. A $10,000 investment a decade ago would be worth approximately $500,000 today. But just in the past month, Nvidia appeared to be losing some momentum. In December alone, shares have lost 10%. Over the same time period, the S&P 500 actually gained 4.26%. Now, some have traced this back to negative news coming from China regarding the potential closure of a Samsung semiconductor plant as a result of the COVID-19 outbreak. Now, this is a plant that may supply certain parts to Nvidia. Others cite this potential closure as all but irrelevant. So is this current bout of weakness an opportunity to get into Nvidia stock at a cheaper price? Or is Nvidia's remarkable run done? Let me know what you think in the comments below. Founded in 1993 and headquartered in Santa Clara in Silicon Valley, California, Nvidia Corporation is one of the world's leading semiconductor manufacturers, taking over Intel's role in the minds of investors as the premier semiconductor manufacturer in the world. Nvidia's impressive graphics processing chips are used for everything from gaming, artificial intelligence, to crypto mining and data centers. But investors forget that Nvidia, first and foremost, is a video gaming hardware name. In fact, video gaming hardware sales was the biggest business last quarter, accounting for a whopping 45% of the company's revenues. But data centers and data centers dedicated to artificial intelligence applications in particular will eventually drive much more revenue to Nvidia than video games do today. Nearly 70% of the world's supercomputers currently already use Nvidia's technology. Nvidia is also well positioned to capitalize on the crypto craze on the back of its notable launch of its crypto mining processor, or CMP. So let's now take a look at Nvidia's valuation and fundamentals. Nvidia's forward PE ratio stands around 60. By way of comparison, the sector has an average forward PE of around 22. So clearly, Nvidia is trading at a premium to the group. Perhaps this is justified. Last quarter, the company set revenue records for both data center sales and gaming sales, with segments rising 55% and 42% respectively. Nvidia's next earnings release is going to happen toward the end of February. At that time, Nvidia is projected to report earnings of $1.22 per share, which would represent year-over-year growth of 56.41%. Looking at the full year, consensus estimates suggest analysts are expecting earnings of $4.33 per share on revenues of $26.69 billion. These totals would mark changes of 73.2% and 60.08% respectively from last year. Now, these are big numbers, especially for a company as big as Nvidia. Now, here are three major challenges Nvidia faces as I see them. First, technology stocks have enjoyed a remarkable run over the past 2 years as the pandemic reshaped economic activity across the planet. But in a post-pandemic world, when the world returns to normal, technology stocks like Nvidia may start to look expensive. After years of outperformance, investors may just fall out of love with technology. Second, Nvidia's prospects in various semiconductor-related fields are great. In fact, the list is almost overwhelming. The challenge is that each of these prospects require massive innovation and adaptation of its business. Today, the bulk of Nvidia's business still comes from specialized gaming chip, with relatively new data center-related chips added on. In short, like any growth stock, Nvidia is all about the future, and that requires excellent execution on Nvidia's part. Put another way, Nvidia's future success is in the hands of its management. Third, there's no way of getting around this, but Nvidia is very expensive. Trading at a forward PE of 60, the company's growth prospects are already reflected in its price. Any small shift in investor sentiment toward the company means that the potential downside in the stock could be substantial. But as of today, Wall Street is still very much in love with Nvidia. Target prices for the stock are as high as $400, averaging around $330. Based on Nvidia's current price, that's far from forecasting a doubling of the stock price in 2022. Still, it's a substantial upside in a market that is making Wall Street nervous. My verdict? I think Wall Street projections are close to the truth, and Nvidia could easily rise another 20 to 30% in 2022. So I think Nvidia is a buy as an investment. The company's strong market position, prospects for growth, and proven management put it in a strong position to thrive in the years ahead. The downsides for the stock are a potential market crash, the company's rich valuation, and management's ability to execute on its ambitious plans. That said, even a crash in the stock price could be spun as good news. As Nvidia has morphed into a blue chip stock, any pullback in the stock could be viewed as a major long-term buying opportunity. So I hope you enjoyed this episode of Buy or Buy. If so, please hit the like button below. I want to remind you that these are not recommendations actively tracked in any model portfolio. If you want to follow any of my buys or sells, size your position accordingly, set a trailing stop, and never bet more than you can afford to lose. And if you want more financial insights on stocks, trends, or money in general, be sure to sign up for Liberty Through Wealth, a free e-letter I contribute to at the link below. This is Nicholas Vardy, and thanks for watching. I'll see you next time on Buy or Buy.